Look at the markets here this morning. Let's take a look at the zones. Let's look at the last today and yesterday. So if I skinny down yesterday, we had a real big runner yesterday morning. Remember, what we want to do is we want to look for pullbacks into these sell zones or buy zones based upon the overall trend in the market. So let's look at yesterday's price action. We'll look at today's price action, and we'll see if we can extract some ticks based upon these zones again. So these zones automatically pop up for us. What we do is we like to go with our back-tested 30-year back-tested trend filter. So if it is red, we want to look to only be selling. So if we are red, so the trend is down, we want to get into these zones. So here's our sell zone. Here's our sell zone that hit yesterday. And then it came into right around after 1:30. We had a trend change. The trend started moving up and it went right to our buy zone. We got the reversal candle, buy zone, reversal candle, and now we're into a buy zone again. So we want to stick with the overall trend of the market and let the market pull back, catch the wrongly positioned traders, and then we could fire into these zones. Now, the question I get a lot is, okay, I understand that we are in a downtrend with the red trend filter being red, and I only want to sell when I get into or at these zones, these sell zones. We call these liquidity grabs because the market's pulling back against the counter trend traders, catching the wrongly positioned traders or the counter trend traders, and then reversing. And we get a reversal candle. So if you noticed, you get a reversal, and then we get a run. Reversal, run, reversal, then we get a run, etc. We're into one now. The question I get, can I use a smaller Renko size to get in? Yes, you can. So for example, let's take a look at the one we're currently in now, into a zone. We're into a zone, reversal zone. So I had a member that likes to use this smaller Renko size. This is a 1112. So if you look, here's our zone. The zones are static, so they don't change. So you have to understand that these zones are static, and the trend filter will be the same if you're on a shorter Renko size or larger Renko size. So this is a 1112 instead of 1135. What that means is the reversal candle will be 12 ticks. That's going to lower your stop. So that's 12 ticks. So that's going to lower your stop based upon the zone. Now I'm going to show you yesterday's zones, how they worked out also using a smaller Renko. The reason being is if you notice on the 1135, we haven't pulled in our first target yet, where we're coming out of our zone pretty hard already on the 1112. The fill was 66 and a quarter plus or minus 1 tick. And it got as high as 72 and a half. So 66 and a quarter, high 72. So we have a 6-point move or 24 tick move already to the upside before the 1135 even pulls in. Okay, so you can use smaller Renko sizes for zones. Let's go back and look at those. I'm going to show you what happens with M tops or W bottoms though. What happens by doing this, if you use smaller Renkos, you can go all the way down to as smallest Renko size as you want. You just got to remember that if you use smaller Renko sizes, you may get multiple reversal inside of that zone for W bottoms or M tops. So you see that's a W bottom. That's a W. And the market takes off. but most times it'll come down to the zone, it will catch it, and it will reverse it. This is yesterday at 418, so 218. So your reversal candle came right inside of the zone on a 1112. That's a 12-tick reversal candle. 35 3/4. Got as high as 53. So almost a 20-point move from that zone. See, this would never get pulled in. This is why I'm saying you'll get multiple ones. So this is a 28 1/4. Low is 19. 9-point reversal. This is a small one. Hit the zone. But we're at 28 1/4. Got as low as 25. Still 3 1/4 points. So well over 12 ticks. And then our multiple zone, our big runner yesterday was here. This is a M top. M top. 46 1/4 on the first move down to 39. This is the big runner you guys caught yesterday. You guys were talking about in the room. Big reversal. Nice runner. 46 all the way down to 18 1/4. Yes, the day before that, we're looking at Monday. The buy zone caught the low. Buy zone caught the low of 42 1/4. Got as high as 74. So over a 30-point move off that buy zone. So if you look at this week from the 21st, we had some pretty good moves. We had the nice buy zone that happened at 9:22 Eastern Standard Time, over a 30-point move. Then we had that nice little M top, another sell-off. Then we get a reversal candle into the buy zone into another buy zone here this morning. So this morning you're working off of a 66 1/4. It's been as high as 72 1/2 so far, and you're into a runner on this trade right now. It's only 8:30 in the morning, and we got a runner. So the point of this video is to tell you this. These zones are static. So these zones are static. They don't move. So you can dictate based upon your risk tolerance per trade what reversal candle that you want to use. So this is a 1-1-12 chart, which is significantly lower, almost 1/3 or 2/3 lower than a 1-1-35. The difference is you're going to get more M tops and W bottoms. But if you're aware of that, you can adjust your stop accordingly, but it will still lower your stop considerably. Okay, so that's something to remember when you're using different Renko sizes. For example, this is a 1-1-12. Instead of using just a standard 1-1-35 if you want to.